What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking about 3 unique gold mining stocks that I thought I would bring to your attention as gold just hit 8.5-year highs this week. So gold's really an awesome topic. I love talking about it, and I love these videos where we compare 3 companies. Now in this video, I will say they're not super small cap mining stocks. In fact, they're mid cap stocks anywhere from a couple $100 million all the way up to $2 billion market caps. So 3 very unique, interesting companies. Each one is very different. So we're going to be comparing these companies on a few different levels using a few different metrics. And yeah, let me know what you think of these picks. Also, feel free to offer your picks down below. Leave me a comment. Let me know what you think about the video. Let me know what you think about, your picks. I did try to check the comments and I got a couple ideas, at least for one of these companies from the comments. So thank you guys. I always try to check comments and read comments, but anyways, without further ado, let's dive into these 3 very interesting, unique gold mining stocks. And if you do support my channel and these types of videos, then of course don't forget to smash that like button. Along with, if you are a new viewer yet you want to learn more about investing, keep up to date on the stock market, gold mining stocks specifically, then don't forget to, of course, smash that subscribe button and the bell for notifications. And let's get straight into this video, guys. So the first thing I want to lead this video off with is just a quick piece of news. Gold futures push above 1800 and hit 8.5-year highs. So in the middle of the week, gold hit 8.5-year highs above 1800. We pulled back a little bit, but I feel like gold will eventually be able to push above 1800, hopefully hold on to that level. And then I got $2,000 per ounce in my sight, so we'll see if we can get there. Gold futures were trading up solidly at daily highs in late morning on Tuesday, hitting 8.5-year highs just above 1800 as traders stepped in to buy the early dip in prices in a market that is technically very bullish and just got more so. So that's it for your update on gold, guys. I just want to pull up the charts here. This is as of Thursday's close. Now for all my Americans, happy July 4th. I believe I will be releasing this video on July the 4th. Yes, that's right. So I will drop this video on Saturday. It's shot Thursday night. So happy July 4th to all my Americans. And thanks for wishing me happy Canada Day. So anyways, guys, we still have the Canada hat there on the rock. I guess I'm going to have to take that off at some point. So in terms of gold, gold closed at 1787, just a couple bucks off of 1800. And now could be a fantastic time to take a look at some of these gold stocks, just as you know. So far, it's been almost every pullback so far has been a buying opportunity for gold, at least if you've been long-term and maintained that long-term outlook. And I will maintain my long-term outlook at least for the next couple of years, at least until, the situation drastically improves in the global economy. So anyways, guys, the first company we're taking a look at is Wallbridge Mining, and this was the one stock that was requested. With a $780 million market cap and a 52-week range of 31 cents to $1.35. So in terms of the charts, we were as high as $1.35. Now we're trading just around $1.08. So a nice little pullback. I mean, I don't know if it's that substantial of a pullback, but at least we're not at 52-week highs. So let's see what Wallbridge Mining is all about. And they're a very unique company for the size of their market cap, just for the simple fact that they actually don't produce gold yet. They've got a ton going on. They've got about a 1 to 2 year horizon in terms of production. So we'll be taking a look at the company. So wallbridgemining.com, golden opportunity for growth, unlocking the value strategic land package, 739 square kilometers in a very awesome mining jurisdiction, the Detour Fenelon Gold Trend. So as you guys know, Kirkland Lake Gold bought Detour Gold, one of the most awesome assets here in Canada. And let's take a look at Wallbridge Mining. So it's an advanced exploration development company driven by a strategic targeted approach. The company is focused on advancing the development of its flagship high-grade Fenelon Gold project in northern Quebec. Since acquiring the project in 2016, Wallbridge has demonstrated the project's potential to host a multi-million ounce gold deposit. Following success of the drill bit, the company's first mineral resource estimate is expected by mid-2021. So there's still that gap in terms of, their first mineral resource estimate, but things are looking pretty good and the stock's been running. I want to talk about some of their strategic shareholders. So first, let's talk a little bit more about the company. So multi-million ounce potential, significant expansion of the Fenelon Gold mineralized system, robust, fully funded 80,000 to 100,000 meter drilling program for 2020. So they're going crazy, drilling a lot this year, and then next year we're going to find out. So it's going to be pretty exciting. Mining friendly jurisdiction, as you guys know, they're in Quebec and Ontario, one of the best places to be mining, one of the safest places to be mining. And now let's dive into the investor presentation, because there's just a few things that I want to highlight here. First being the share ownership. So Eric Sprott owns 21% of the company. Kirkland Lake Gold owns 8% of the company. Management and directors own 1.6%. Retail and others 61%. And then William Day Construction owns 7.8%. So the most significant shareholders here, of course, are Eric Sprott and Kirkland Lake at 29%. So I think that that's very important. So guys, to bring us up to speed, 2020 planned 70 to 80,000 meter drilling program on Fenelon and 20,000 meters on newly acquired land. So those newly acquired lands were Wallbridge's recent acquisition of Balmoral Resources expands Fenelon gold land package from 10.5 kilometers squared to 85.6 kilometers squared. Now, a lot of these slides just talk about, their deposits, where they plan to drill. So if you want to get super technical, we can talk about that. But for the most part, I just want to go over the financials now and compare it to the other two companies that we're talking about. So there's a lot going on for Wallbridge Mining, but once again, note the key strategic shareholders, Eric Sprott, Kirkland Lake Gold. That's very promising. And not to mention the area that they're in. So very exciting. Second company is Coeur Mining or Coeur Mining. I don't know how to say that name exactly correct, but $1.18 billion market cap, 52-week range of $1.98 to $8.29. Currently trading for $4.85, so it's well off of those highs, and the stock hasn't been doing that great recently. We've seen another company like this that was profiled in last Sunday's video. Now, in my opinion, part of the reasons might be their diversity, or in a sense over diversity, but we'll be taking a look at their operations in just 2 seconds. This company has a lot going on in terms of their operations. Now, it did have a nice run from $4.50 all the way up to $5, and the trend looks pretty good. This is not a fast moving stock like Wallbridge Mining. So let's take a look and see what Coeur Mining is all about. So Coeur Mining is a well-diversified, growing precious metal producer with 5 operations in North America. Coeur's wholly owned operations include the Palmarejo Gold Silver Complex in Mexico, the Rochester Silver Gold Mine in Nevada, the Kensington Gold Mine in Alaska, the Wharf Gold Mine in South Dakota, and Silvertip Silver, Zinc, and Lead Mine in British Columbia. So let's just dive straight into their operations. Here we can see, guys, Palmarejo in Mexico, Rochester in New York, Kensington in Alaska, Silvertip in British Columbia, and the Wharf in South Dakota. So let's take a look at their operations, and then of course we're going to be comparing these 3 companies with our mining spreadsheet, going over the financials and a few other things that I wanted to highlight for these 3 companies. So for Coeur Mining, the Palmarejo project is gold and silver, Rochester gold and silver, Kensington gold, Wharf gold, and then Silvertip silver, zinc, and lead. So let's take a look at their asset breakdown, at least for 2019. So 69% gold, 27% silver, 2% zinc, and 2% lead. And then here we go, guys, 6% in Canada, 58% in the US, 36% in Mexico. So one thing I like about the company, their operations are in North America, so they're in pretty safe mining jurisdictions. I mean, I favor America and Canada over Mexico, of course, for the tax reasons, but still 2/3 in North America, which is good to know. And when it comes down to the reserves or AISC, we're going to compare that in our spreadsheet. Now, the third company we're taking a look at, and this is kind of a different business model. The first company was technically an exploration stage company, but a huge exploration stage company, at least for the market cap. Usually exploration stage companies are much smaller, but Wallbridge has an awesome land package. And then we have Coeur Mining that's already producing. They've got assets all over the world and they're trying to consolidate their business. Then for the third company, I included Osisko Gold Royalties, and Osisko Gold Royalties is a royalty streamer. They don't actually own any mines, but what they do is they help mines advance so they can take their gold in the form of a streaming contract, or they just straight up go to the mine and say, we're going to negotiate so that we can buy your gold and silver at a certain price. And that's essentially what streamers do. They have multiple contracts with all these different mines, and then they just agree to purchase X amount of the production of gold for either X amount of years or for the life of the mine. So that's usually how it works with the streamers. One nice thing about streamers, they tend to pay a pretty good dividend. Osisko Gold Royalties pays 1.5% dividend, which is pretty nice. And I managed to pick up a couple shares around 11, 12 bucks recently, but I think this thing has way more room to run. If we look at Franco-Nevada, Wheaton Precious Metals, this stock hasn't even started to take off compared to the other 3. Anyways, guys, with that being said, that's the background for Osisko Gold Royalties. I have talked about this company before yet again, but we're going to go over their investor presentation just one more time and then actually into the financials this time. Why own Osisko? Quality, upside, and opportunity, of course. A quality portfolio, over 135 royalty streams and precious metal offtakes, diversified cash flow from 16 producing assets, primarily on gold mines, 91% cash operating margins. That's what I love about these companies too. Their margins are just so good. Lowest geopolitical risk profile. So here we go, guys. We can compare this company to the North American majors or to even the other streamers. Wheaton Precious Metals is only 36% in America and 64% elsewhere. Franco-Nevada, 27% in North America, 73% elsewhere. Sandstorm Gold, 20% in North America. Osisko Gold Royalties, 86% in North America and 14% elsewhere. So highest dividend in the royalty sector at 1.5%, even beating the North American majors. Significantly undervalued with opportunity for re-rate, high trading liquidity, strong balance sheet with $243 million in cash, $900 million in total financial capacity, diversified supportive shareholder base. So their core business, which is 75% of their model, basically they get the cash, they go to the mining operations, and they get the gold. And then, of course, the royalty streaming rights go right back to the company. Now, the other 25% of their business model, early stage accelerator business. So basically, they leverage a technical team to select early stage stories. In the accelerator companies, they combine assets, teams, and capital, obtain high value royalties at low price with limited competition, create royalties that otherwise wouldn't exist. So they go to, let's say, a junior miner or a miner who needs funding in order to build a mine. They fund it, they find some gold, they start mining, and bam, they've just created a stream. So it's almost like an incubator for smaller stage gold projects, which is really interesting and exciting, which can offer above average returns. It's like investing in a business that basically goes around to other companies and helps them incubate. So anyways, that's a portion of the 25. They also have Caribou, which is North Spirit Discovery Group. Caribou is a district camp with decades of exploration potential, seeking external financing to advance the Caribou Gold Project within NSDG, providing Osisko shareholders with exposure to private equity type return as Caribou as advanced. So taking a look at their tier 1 royalty profile, 75% asset NPV in Canada, 86% in North America, 135 royalty streams and precious metal offtakes. So 13 in Australia, 9 in South America, 108 in North America, which is the majority of it, 2 in Africa, 6 in the European area, and 3 in the Asian area. So let's talk about the prime real estate in Canada. Royalty streams on over 25,000 square kilometers, the most prolific mining camps, decades of future exploration potential. Production and cash flow growth, strong development pipeline of assets, higher exposure to gold. So you guys might be wondering, what does GEO mean? GEO means gold equivalent ounce. So basically, how many ounces of gold? Paid for royalty streaming ounces of 140,000 plus. GEO production entering into the next phase of growth with contribution of Canada's next major gold mines. So as you can see, it's been consistently growing. In 2019, 78,000 ounces, and now they're looking at 140,000 plus ounces. So guys, with that being said, we're going to wrap this up for Osisko and pretty much say, I like the fact that 75% of their core royalty business is coming from already producing mines, but I really like they have that 25%, the early stage accelerator business and the Caribou North Spirit Discovery Group. Therefore, they can get in on some exploration stage companies. Therefore, they can capitalize on helping to advance projects and create additional streams that they would have never had. It's just an interesting business model. It offers a dividend yield. It also offers future growth, and the stock hasn't ran like crazy, which I really like about it. Because if we take a look at the 5-year chart, guys, this thing is nowhere close to 52-week highs. 52-week highs of 1747, but let's compare this chart to some other streamers, and they're nowhere even close. So these are the companies that I like to find, before they've essentially gone on a big run. So that's happening all throughout the gold sector. We saw what happened to core mining this week. Absolutely crazy. The stock ran all week from almost $1.20 to $2. So let's compare this company to something like Wheaton Precious Metals, Franco-Nevada. And as we can see here, guys, over the past year, Osisko Gold Royalties is in fact down 10%. Meanwhile, we've got Wheaton Precious Metals and Franco-Nevada up 57 and 61% respectively. So I don't know why this thing hasn't ran just yet, but I definitely think that it's undervalued compared to its peers. And I love the fact that it's got such exposure to safe mining jurisdictions. So now let's dive into our mining spreadsheet and take a look at these companies. So when we compare the current ratio is just the total current assets to the total current liabilities. It indicates the short-term financial health of the company. Essentially, anything over 1 is considered good. Wallbridge Mining has a 6.7 current ratio. Osisko Gold comes in at 2.5 and Coeur Mining at 1.6. So they're all over 1. That's definitely what I like to see, but Wallbridge Mining is in the green there with a lot of current assets and not a lot of total current liabilities. Now, when it comes to the price to book ratio, Wallbridge Mining is in fact the most expensive. And what I've found is a lot of these companies that are owned by Kirkland Lake, Eric Sprott, any of the big investors in the gold sector, the Lundin Mining Group, Bluestone Resources, they tend to have higher valuations, but at the same time, you know, money does talk. So if Eric Sprott's going to own 21% of a company, you know, he must believe in the company, because we're talking like hundreds of millions of dollars here. So, and don't get me wrong, it's probably already paid off for him. He's probably been a long-term shareholder in the company, but Wallbridge Mining's price to book ratio comes in at 7.46. Now, the price to book ratio is essentially what investors are willing to pay above and beyond the book value of the company or the assets, basically the property, plant, equipment, and any other assets. So that's why we compare stockholder equity to market cap. And as you can see here, stockholder equity of 102 million with a market cap of 780 million, we arrive at a 7.64 price to book ratio. Now, the cheapest company in terms of price to book ratio is Osisko Royalties at 1.49. So when it comes to valuation, I definitely think that Osisko Gold Royalties is still the most undervalued of the three. Not to mention, you know, I really favor their business model. I like that 25% exposure to the incubator and the exploration stage projects. So let's just say I'm already in favor of Osisko Gold Royalties when it comes to these three. We'll talk about which one I think has the most potential in just 2 seconds. So let's compare the rest. In terms of cash, I think Wallbridge Mining has the most amount of cash compared to its market cap. Osisko Gold Royalties with 158 million is pretty close. And then we've got Coeur Mining with 52 million. To be honest, guys, they all have a pretty good cash position, but I just think that Wallbridge has the best cash position for its situation. Now, in terms of dividend yield, we know that these two companies don't yield anything, and Osisko Gold Royalties yields 1.5%. Now, in terms of the mineral reserves, as we know, Wallbridge Mining doesn't know their mineral reserves. We will know halfway through 2021. When it comes to Coeur Mining currently has 2.6 million ounces measured and indicated, and 244 million ounces measured and indicated ounces of silver, 2.6 proven and probable gold reserves, 182.9 million ounces of silver, 2.9 million ounces inferred of gold, and 112.7 million ounces of silver inferred. So they've got quite the resource base. Now, that is all across the world, and we've gone over their projects. So in terms of their gold production, at least for last year, 350,000 ounces produced and 11.7 million ounces of silver produced. So now when it comes to Wallbridge Mining, they do anticipate that once the mine is built, by 2021, they should be able to produce over 100,000 ounces of gold per year. And we know they're sitting on a pretty nice asset. So there's a lot of unknowns when it comes to Wallbridge Mining, but it could be a very big hit in the future. So we'll see what happens, guys. Now, my opinion on the three companies. So here's my personal opinion on each one of them, and I'll tell you which one I favor in just 2 seconds. So in terms of Coeur Mining, I think they've got some really great assets. I think once again they need to consolidate their business. We've seen this underperformance in the share price of these mining companies that are kind of just spread out all across the world. Not that it's a bad thing, but I think that, you know, they need to consolidate their operations a little bit. Feel free to argue with me in the comments. I'd love to hear your opinion. This is just simply my opinion and from what I've taken a look at with their investor presentation. But overall, I think that, you know, Coeur Mining trades at a very attractive valuation compared to some of the other mining companies, and it does have the potential to run, because we know when the bull market hits, pretty much everything runs. We've seen this in the MJ sector, the tech bubble. It's always the same. So Now going to Wallbridge Mining, I think this one has the most upside despite its run already. The stocks ran like crazy, but it's still only a $1.08. Eric Sprout owns 21%. Kirkland Lake owns 8%. They hit some really good drill results soon this year, next year. They show us that they've got a really nice asset. Who knows? Maybe it's bigger than what they expect. Who knows how high this stock could go? It's a very exciting stock. So Wallbridge Mining, highly volatile, but I think that this stock has tons of potential, especially when they're mining in such a well-known mining jurisdiction. So very exciting company. And then Osisko Gold Royalties, I think this is the safest one with the best risk to reward ratio. If you don't want too much risk, you want to collect the dividend, you want multiple streams in safe mining jurisdictions, I highly favor Osisko Gold Royalties for an investor who doesn't necessarily want to take a lot of risk but wants exposure to gold, wants a company that's focused on gold, but also wants to kind of sit back and relax and know that if the company doesn't hit awesome drill results, it's going to tank 20%. So that's my opinion on the three guys. And I got to say, I like exciting companies. So in terms of, capital gains, I favor Wallbridge Mining, but Osisko Gold Royalties, I'd be more comfortable with holding a larger position. So that's it, guys. That's my opinion on the three companies. Hope you enjoyed this video. I'm super tired. I'm getting out of here. Hope you have a fantastic weekend. That's it for the video. Always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.